Welcome. This is a Carcinia demonstration for vehicle purchase management. Now in Carcinia, purchase is one of the things that you're going to be doing on a regular basis. When you purchase a new vehicle, you need to enter it to the system so that you can actually get it ready for the sale. And usually you enter the new vehicle from the vehicles under vehicles, new vehicle, and here you can enter I'm just going to be entering a false VIN number right now, and some um, fake external stock number. I don't want the analyze the VIN, obviously, and I don't want to detect the year, model, trim. Let's leave all of them empty for now. This is just a test vehicle, so I'm not entering real values. So if you look at the purchase information, the common scenarios in which you would be purchasing a vehicle would be from an auction, um, or you would be purchasing the vehicle as a trade-in. It's very rarely through a business partner um, or an acquaintance, or just a walk-in customer. But even those cases would be very similar to the auction purchases. So in this case, let's assume that we actually purchased this vehicle from an auction, and the market is basically your purchase channels. You can configure these values, and let's say that we actually purchased our vehicle for $10,000, and the actual cash value is the same. And let's say in the auction we paid $100 for the purchase fees. Now let's say that there was a lien on the vehicle. Um, let's say that the lien amount was $4,000, and it was due to Bank of America. And let's say that it actually had accrued another $200 of interest. And so the question is, how are we going to be paying for this vehicle that we're purchasing? You can do cash payment. You can actually enter 10,100 here, and as you can see, the outstanding balance goes to zero. But in the auctions, or outside of the auctions as well, most dealers use floor plans, which is basically loans, inventory loans from financing companies. So let's assume that we actually use the floor plan lender, in this case AFC, and we are using a standard term for the AFC, which I will explain in a minute. And then the inventory loan amount for this particular vehicle, let's say it's 10,100. It's full financing, and also the fees. Basically, for this loan, we're going to be owing AFC, let's say $80, and we're going to be adding our vehicle. So as you can see, we added this vehicle to our system, and this is our purchase tab for the vehicle. You can come to this section anytime you want. As soon as you click on the vehicle, you come to the purchase tab. This is basically all the information about the vehicle, the purchase transaction, the floor plans, and all that stuff. Now you can see that there is an inventory loan section here because we purchased this vehicle through an inventory loan. We use floor plan financing for this when purchasing this particular vehicle. If we had not, if you look at this particular vehicle, there is no floor plan financing here, and you can always add it over here by clicking on it says that there are no inventory loans taken for the purchase of this vehicle. You can click on add, and you can add floor plan financing, and then you would have a similar view to this vehicle. So you can see the purchase balance here. We purchased this vehicle. We paid $10,000 for it, and the purchase fees were actually $100. So the actual cost, purchase cost, was $10,100, and there was a lien on the vehicle. And you can see that it says the total payments required. It may be a little bit misleading here. It's saying that these are the parties that are waiting to receive uh, money as a result of this purchase. And as you can see, we paid. This is basically the dealer paying the seller through the floor plan, which it's kind of coming from the floor plan company actually. Um, and we could have paid cash for this vehicle. In this case, it will be over here. So we could actually remove this floor plan financing and add cash payments over here. The other part that you will see here is there are no direct payments made for the lien on this vehicle, so which means the lien is still unpaid. Now this can be a little bit misleading because it's basically the customer and the dealer closing the lien on the vehicle um, together, but it's really the customer's money, customer paying for the lien of this vehicle prior to finishing the actual transaction. So presumably the customer would get the $10,000 that this dealership is paying for, and then it would basically close out the lien um, by paying for the lien. So we really register it here just to make sure that the lien, I mean, it's basically a way for us to tell to the system the lien is closed and the customer paid for it. It says here customer payments to lien on the vehicle. And at this point in time, the seller is paid, the lien holder is paid, and the only outstanding balance is our floor plan. Um, so as you can see, the floor plan, it automatically created some invoices. This is determined based on the terms. So what are terms? If we come to financing and we click on terms, we have a few different terms, and most floor plan companies have one or two different plans. Um, and let's edit one of these terms, and I will explain what it means now. So this is the plan, and this is the term that we used, the standard term for AFC. It says post-sale payment days 2, which means how many days after the vehicle sale are we due to pay for this vehicle. After you sell the vehicle, you're supposed to finish off the loan for the floor plan. That's basically what the floor plan is. It's a short-term loan that you have to pay for the vehicle as soon as you sell it. And if this is pre-sale payment day 1, which is 30, which means if I don't sell this vehicle within 30 days, I'm supposed to pay 30% of this loan. If I don't sell it within 60 days, I'm supposed to pay another 30%. And if I don't sell it within 90 days, then I'm supposed to pay the remaining 40% and close off the loan on the vehicle. And as you can see, when we entered the purchase for the vehicle, and then we said we were using inventory loan, the system automatically created the invoices. Now these are not real invoices, obviously. This is kind of like your payment plan, and this one is the inventory loan fee. Obviously this is just the fee, which is $80. It's due right now. Now every floor plan company may have different rules about it. You can edit these invoices, you can enter the actual invoice number, whatever it may be, or if you incur more interest later on, you can update it over here. This is basically how much you owe to the floor plan company, and as you get invoices from the floor plan company, you can enter them over here and keep track of it. And if you actually make a payment, you can add a new invoice here, and if you want to make a payment, you can enter it over here. Now before I make a payment, I want to show another list view here, which is under finance inventory loans. So this is basically where we control all our inventory loans, floor plans. So in this case, we can see that our new vehicle is here is showing up. Remaining inventory loan amount is $10,180 now, because we got the fee there as well. And as you can see, it's due today, next inventory loan due date. And let's normally every day you would be coming over here to the floor plans and checking out what needs to be paid. You can also filter this list by due after days, due in days. So I want to see everything that's due in 3 days. You can see that, or you can clear it out, and it will show you everything. So let's say we come in here and we make a payment. We pay for the fee only today. We're entering some check. I don't need to enter the check number. And as you can see, the total due amount went down somewhat, which is $80. And now we don't have any fees due, no interest. The next payment due is $727. Now the inventory loans view is not so smart in this case. If you look back here, it still shows the next inventory loan due date as 627, which is, and the remaining inventory loan amount now went down a little bit, which is $10,100. By the next day, you would be seeing the next invoice due. In this case, we would be seeing 727 as what happened in this case. For example, if you look at this particular vehicle, it's a very similar configuration. It's pretty similar to the previous one, except this was done the previous day. So in this case, we have June 26th, which was paid, and now the next inventory loan due date is July. So this list is not that smart, but it can say that the other invoice was in the past, and now you have a new one due. So you should be keeping track of your floor plan payments here, and make sure that you're on top of it to make sure that you're not going to be incurring any unnecessary interests. Now let's try selling this vehicle. Usually you would be selling this vehicle with the deal wizard, and our vehicle ID is 5897. So I'm going to be entering a new deal here. Let's say I'm going to be selling it for $15,000, and let's say we're going to be getting a trade as a result of that transaction. Let's say we're going to be getting a trade that's $4,000. We're going to be paying $4,000 for the trade, and let's say there was $2,000 balance owed on the trade. So let's enter our customer, just entering test. We don't need any references, we don't need any credit reports for this customer. Now we're going to be entering 5897, which is the vehicle that we just entered. As you can see, the system automatically brought in the purchase fees, the floor plan lender, floor plan fee, and all that stuff. So now you would be obviously entering the insurance information for a real transaction, the forms, notes, etc., and recap. So in this case, we had purchased this vehicle for $10,100, $80 inventory loan cost. So our total cost so far, we didn't do any reconditioning, anything like that. So now we have our total cost is $10,180, and we're selling the vehicle for $15,400. And let's contract the vehicle. Oh, I need to enter the trade, obviously. So let's say that we're entering a new trade now. Trade vehicle, we're getting a new trade, and let's say that this is 2009 Hyundai Accent, and let's say there's a lien holder on the vehicle. It's Wells Fargo, because there was a balance on trade, right, that we entered that was $2,000. So now we're contracting the well, we didn't pay, we didn't enter the payment for the vehicle by the seller. So now let's say the seller is paying cash. You can do deal adjustments over here, and let's contract the vehicle. And now the deal is successfully contracted and vehicle is sold. So you can see the sale information for this vehicle over here. Now it shows a trade here because buyer paid 12,400 and some dollars for the purchase of this vehicle, and some of it is paid through the trade. And it was basically like $2,000, $4,000 for the vehicle, and then there was the lien. So if we go to the purchased vehicle, this is the vehicle that we purchased through the trade. It's slightly different than what we have seen in the previous example because there is no inventory loan, there is no direct payment. We purchased this vehicle as part of a trade. So we paid $4,000 for it, and this is the 4,000, and we paid it through the trade. And there was $2,000 lien on the vehicle, which the customer took our $4,000 and basically paid for the lien on the vehicle. And this is where you can see all this information. So in this case, we don't need to enter the lien payments because the system automatically took care of it. And the you know, pretty much all the scenarios that you can encounter can be entered in this purchase tab. And yeah, you can enter the walk-ins or any other channels that you may be using. Now, one last thing that we have not done, now that we sold this vehicle, we should go and close the inventory loan. Now, if we go over here, now I want to pay the inventory loan, $10,100. I make the payment, and now I have nothing. It's all clean. And now if I go to the finance, inventory loans, that vehicle does not show up anymore. And that's about it. Contact us for any questions. Thank you.